Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, and welcome to an all-new episode of the Smart Property Investment Show. I'm Grace Ormsby, one of the journalists behind the platform, and I recently was given the opportunity to sit down, socially distanced via Zoom of course, with Domain Senior Research Analyst Dr. Nicola Powell. So we talked about all things buying and selling during a pandemic, and I think her insights are really valuable for investors, so we wanted to share with the Smart Property Investment audience. Here's the interview. I hope you enjoy it.
Welcome to the Nest Egg Podcast, where we explore how you can grow, protect and manage your wealth.
Hello everyone, and welcome to an all-new episode of the Nest Egg Podcast. I'm Grace Ormsby, one of the journalists behind Nest Egg, and whether we like it or not, there's no doubt that property is embedded into our lives in one way or another. Whether you own your own home, you're renting, you're living in a share house, you hold investment properties or are thinking about the future, you've got a relationship with property. And now that so many of us are spending more time than ever before in the confines of our own home, on the release of Domain's Q2 2020 house price report, I jumped at the chance to bring in Domain's Senior Research Analyst as a guest on the Nest Egg Show. Dr. Nicola Powell, thanks so much for joining us today. How are you?
Hello, Grace. It's great to be here. Thanks for having me.
So just as an FYI to everyone who is at home, we are still operating remotely. We're social distancing. Obviously, we're recording via Zoom, so apologies if the sound quality isn't great, but we're just grateful that we can still be bringing our podcast to you all. First off the bat, Nicola, with your research, what are you seeing from, a top-down Australia-wide approach?
Yeah, so it's been a pretty eventful June quarter. So the June quarter is obviously the first quarter where we've truly seen the impacts of COVID-19 on the property market. And I think, when we have a look first comparing sales and rental markets have definitely seen the biggest disruption compared to the sales market. But, we still have recorded price falls, and nationally what we have seen are prices have fallen over that June quarter across most of our capital cities. But what I would say is that the falls that we have recorded to date have been fairly mild. And that's because there are a number of things that are currently in place that are really helping to support the housing market at the moment.
And that would be, I'm assuming, the home builder, the job keeper, job seeker, even then the moratorium that we've had on the rental evictions and things like that.
Absolutely. I mean, the government stimulus that we've seen post-COVID, or during COVID, I should say, has been unprecedented. And, the government really needed to go hard and quick with its financial support to help the economy and help homeowners through this really challenging time financially for us all. We've seen the lenders have allowed people to take those mortgage pauses, so we can have a mortgage holiday if we are under financial strain. And obviously, we've got low rates, which is helping aid affordability, helping aid those mortgage repayments. We're seeing a lot of people refinancing their mortgages, their home loans to get that better deal. And one of the things as well that's helped to support prices is this persistently low level of stock. It was quite a remarkable reaction from buyers and sellers as we went through that first lockdown for us all. And what we saw is a pullback in buyer and seller activity. And that pullback in itself helped to really create that floor for prices and support the market.
That leads really well into my next question, which is are people reluctant to be thinking about property at the moment, apart from the fact that they still need somewhere to live? Are people stopping buying and selling, or are they, staying in a rental that they may not necessarily stay in because it's secure? What are you seeing?
Yeah, I mean, ultimately we all need a roof over our heads. And I think what we have seen is during that first lockdown, we saw this pullback in buyer and seller activity, as I just mentioned, particularly in new listings coming onto the market. It really did pull back, and that really helped to support prices. But I think what we saw during that period is homeowners just paused and they waited. And I think we saw the transactions that needed to occur, those people that had to move, because, life is still continuing. Some people really do have to move during that period of lockdown. The same thing is happening in Melbourne currently during their second lockdown. But what was remarkable was the confidence that came back to the market once restrictions started to ease, and the influx of new listings that we saw come on was, the transition back was quite remarkable in terms of that rebound in listings. And, I think Melbourne, for example, Victoria is experiencing that again. We have seen a pullback. We're seeing a withdrawal of auctions. People are just pausing through their second lockdown.
It might be a good time to sort of look at how it's affecting each group of residential dwellers then, I guess, for lack of a better term, but homeowners. So they're coming back into the market when they feel like it's safe to. Do you think we'll see a spring selling season? Are people looking to make upgrades, downgrades, or is it still just a bit more of a wait and see? We might get a better outlook or return on our investment later down the track.
Well, I think, we've certainly seen transactions come back. There's no doubt about that. Apart from obviously in Melbourne, I think Melbourne's the only caveat that I would put around kind of my statements at the moment, because they are obviously living through their second lockdown. I think one of the trends that we're seeing at the moment is this increase because the home loan data was just released today, and there's this big increase in loans towards alterations and additions to your home. There was a big increase, and I'm expecting that to continue as people take advantage of the home builder grant initiative from the federal government. But I think, in terms of if we think about buyer segments and who are the winners and potential losers in this downturn that we're currently now seeing, because we have seen prices revise downwards. Now, firstly, I think, I always like to make the statement that if you're buying and selling in the same market, you kind of one counterbalances the other anyway. I think it's very hard, even as an analyst, I look at these numbers every day. It's very hard to pick precisely the peak and precisely the trough. So you really have to factor in your own personal circumstances when you're buying and selling, or when you're looking for a new rental accommodation. But I think, where the opportunities I see in terms of those buyer segments is, so Sydney and Melbourne are feeling the brunt of the downturn, more so in Melbourne. Melbourne tends to lead the downturns. But what we see is the upper end of the market has seen more substantial price falls. So we're seeing that kind of top percentile of properties losing the most value compared to the other segments of price brackets. So what that I think presents is opportunities for buyers to upsize, because what they will find is their sector, their price point may still be rising, because we're still seeing prices rise in some of our market segments. But because the upper end of the market is feeling the brunt of the falls, that gap to upsize is actually decreased. So it's a smaller gap to jump upwards. And I think, the big winners are first home buyers. There are lots of initiatives across all of our states and territories. They do differ. And obviously we've got federal initiatives as well, helping first home buyers get onto the property ladder. And obviously we've got now prices falling, which in itself aids affordability, because it means that for some first home buyers, they'll be able to jump onto that property ladder much sooner than they once thought, because obviously the amount that they need to save in their deposit is lower. And we've got a number of initiatives such as waivering of stamp duty. We only had New South Wales government very recently up their threshold of stamp duty wavering. So, there's lots of winners. I think the only segment that would perhaps, find these conditions challenging are those that perhaps are looking to completely cash out of their home. Perhaps they're looking to move into a retirement home. So those, coming to retirement may feel the pinch a bit more than others.
Jumping back into that stamp duty, that has been a huge story for us at Nest Egg, that in New South Wales, stamp duty has been gotten rid of basically for anyone who's buying a new home as a first home buyer up to that $800,000 threshold. Is there any kind of concern out there that this is going to artificially inflate prices at all? Or are we in such a downturn that it doesn't really matter? There's nothing that can really push it up artificially anyway.
So what you tend to see is when you have incentives, it can obviously increase demand, and that increased demand does help to support and can drive up price. We saw that in the last downturn where there were already New South Wales government initiatives, and we saw the lower end of the market actually performing much better than any other kind of price, the mid or the upper sector of the market. So it was helping to support prices because we did see an increase in first home buyer activity. So yes, there is possibility that it could continue to support prices at that lower end, and we may continue to see prices at that lower end grow. I mean, one of the areas, if you look at, say, Greater Sydney, we saw this trend of first home buyers moving to outer peripheral of Sydney and also to the Central Coast. And these are some of the areas that held up much longer in the last kind of 2017 to 19 downturn. And I think, there is this other, thought that, we're only seeing it being raised for new homes. So first of all, I think it's fantastic that it has been raised, because I think that price point is much more in line with the prices that we see in our more expensive markets such as Sydney. It is hard to gain entry to a very expensive market like Sydney, but it is only on new homes. So it's going to stimulate construction because it is a very ailing sector at the moment. It is being impacted. You can see that in those dwelling approvals over June. Those dwelling approvals fell 5% over June. And over the past 2 months, they're down 20%. So it is a sector of industry that really needs help during this crisis and needs stimulating. But it is on new homes. But yeah, it could ultimately drive up price.
Nicola, we're going to take a break now, but straight after that, we've already talked a lot about Sydney and Melbourne, so we might look to some of the other markets in Australia to see how they're going.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back to this episode of the Nest Egg podcast, and I'm picking the brains of Dr. Nicola Powell to find out all about how the property market is going, especially given the coronavirus downturn that we're all facing at the moment. I think it's great to check in and just see what's going on in the property market, because if the property market is not going great, I think this is fair to say, then a lot of Australia's economy is probably not going great. So we've talked already about Sydney and Melbourne. What are you seeing across some of the other markets? I know there's some interesting figures there. Canberra is somehow doing really well. Well, not somehow. It tends to do really well. What are you seeing there? And then how does that compare to some of the other markets?
Yeah, absolutely. So there were some capital cities that bucked this trend of falling prices that we saw over June. Canberra was one of those. What we saw, it was for houses really in the ACT. We saw a strong quarterly growth, which has pushed median house prices in Canberra to a record high. It's broken 800,000 for the first time. And Canberra really is just this quiet achiever. It just continues to forge ahead. It misses the big peaks and troughs that we see in our major capital cities, Sydney and Melbourne, and is more of a steady achiever. And I would say the same statement for Adelaide as well, which is also performing fairly well.
Would you say that's a bit to do with the fact that, that public sector is so much more stable? Anything that the government brings in stimulus-wise, they're obviously working at 10, 100 times the pace of anyone else, even during a downturn.
Yeah, so I think Canberra in itself was a better place to withstand the economic impacts that COVID-19 has hit all of our states. But I would say that the ACT hasn't felt the impact of COVID-19 in the same way as our other capital cities. What Canberra had before COVID was the lowest unemployment rate out of all of the states and territories. And even though that jobless rate has risen due to the impact of COVID-19 job losses, it is still very low compared to the other states and territories. And as you said, that's because Canberra is supported by this high percentage of public sector employment, where job losses losses have been minimal. We've even seen some sectors of government actually grow because the demand in certain departments has actually grown during this pandemic. And I think, even though, there is a high proportion of public sector workers in the ACT, there are also lots of other industries, other businesses in Canberra that are supported by public sector, the outsourcing industries which are being supported by government spending.
That's a good point.
And the other thing Canberra has is a resurgence of first-home buyers. You've got the ACT government that has introduced, as of this financial year, a new initiative for first-home buyers, and the number of first-home buyers in the ACT has just leaped since this has been introduced.
So Canberra's obviously doing really well. What about some of the ones that maybe were struggling a little bit before coronavirus even was on anyone's radar? Say Perth. I might pull out that capital city out of my hat first.
Yeah. So Perth, it's always been this one of, has it reached its trough? When is it going to start recovering? Is it starting to rebound? And there were some really positive signs coming out of Perth pre-COVID. But what we did see are house prices in Perth fell over the June quarter. But prior to that, it had 2 quarters of growth, which is an amazing outcome for Perth. You have to remember that Perth has had a multi-year downturn. It's really struggled to improve post that mining boom. But I think, a recovery for Perth is still on the cards. I think what we've seen is, the economic impact of COVID-19 has paused that rebound. We have seen prices fall, but that fall was marginal. House prices are still above the trough that was reached around mid last year. They're marginally above that trough by 0.1%. But there's lots of opportunities, I still think, for buyers in Perth. Prices are 15%, house prices 15% below that late 2014 peak. But I think, overall, I think interest is starting to renew in Perth. When you have a look at search behaviour, there's lots of WA areas in the areas that have seen the biggest increase, year on year. So it shows that people are starting to look towards WA as, perhaps it's investors looking towards those areas that could see a rebound in price. And I think, when you see a recovering market, it's always homeowners that are on the ground that kind of, see this recovery before anybody else. And you tend to see kind of those more expensive suburbs start to recover first. And we've already started to see that in Perth. I think coronavirus has just put a pause on that for the time being.
And I guess that's probably one of the reasons as well. I don't want to get too much into political commentary here, but why they're so bent on keeping those borders closed, just so that they don't want any more issues to come into that economy, do they?
I think so. I think there are lots of risks. We can see that there's lots of risks associated with a second outbreak. And there's always been this thought that, if we have a second outbreak, the economic impacts could be more severe than the first. And so I can understand why we're seeing jurisdictions be very tight on their borders. Queensland, is stepping up on the mark in terms of tightening their border restrictions again. So I can understand that, because I think the repercussions of a secondary outbreak, we need economic recovery to be quick, and we need it to rebound as fast as possible and contain the virus as fast as possible. So, I can understand why they're being so strict.
We're going to take another break there, but there's so many insights that have come out of this quarter report that we could go to town on. But after the break, I want to ask about some of the more interesting insights that you've found in your research.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back to this brand new episode of the Nest Egg podcast, where I'm joined by Dr. Nicola Powell, and we're discussing all things housing, especially in light of the current COVID-19 crisis. Nicola, we're seeing from our end a lot of people, I for one am working from home a lot more than I was pre-pandemic, and I think a lot of people would be in the same boat. How have you noticed, how can you see that quantitatively in the data that you're seeing? Is there a lifestyle shift happening? Are people moving away from, wanting a tiny shoebox apartment in the city? What does that look like to you in market research?
Yeah, absolutely. I think there is a change. I think prospective buyers are searching for different things now. Whether that will be a long-term change, time will tell, but it's certainly something that is happening in the short term at the moment. As you said, I think, what we've seen from this pandemic is it's forced us all to work from home if we can. And when you think about, when you've chosen where you're going to live, whether it's purchasing or whether it's renting, the decision to be close to your workplace or near to, a train line or, easy connectivity to your work has been a very important factor in that decision. And I wonder whether, moving forward, that will be less of a factor in that decision, because I think, we will be able to work from home. I think businesses are much more open to working from home. So I think that long-term trend, we could see an increase in regional moves. We could see an increase in people choosing to live on that urban fringe in that larger home, as we are able to split our time between our home and our office. And I think those immediate trends are fascinating. They have changed. And they're continuing to change month on month. One of the biggest changes we've seen is this, we look at keyword searches. So what are buyers, what are people doing? Home office really wasn't a key search term.
On domain, that's right.
Yeah,
on the domain platform, yeah.
That's correct. So it really wasn't, people were searching home office, but since the health crisis, it has increased an extraordinary amount, particularly in Victoria, where they've obviously seen a rebound. So when you compare the March quarter to June quarter, the search term home office increased 605%.
605, wow.
It's amazing. And similar for New South Wales, it was up by 95%. Other search terms as well. So study has always been a traditional search term that we see buyers look towards, but most of our states and territories saw a pretty dramatic increase. But it's other things as well, such as, as you say, perky flats, perky apartments, are we going to see people wanting to live as we've been locked down for such a long period of time? But we saw an increase in search terms such as balcony, courtyard, garden. Even granny flat in Victoria has become a search term, up by 235% from March to the June quarter.
Wow. Yeah, I can see, even in my mind, the first thing that kind of comes up is, well, if you can't have a home office, do you get another bedroom? Are there going to be spaces that are sort of more used in different ways? Are we going to want to be able to carry out multi-purposes in the one space?
Yeah, absolutely. I think, multifunctional rooms have certainly been a modern trend anyway, as we see kind of that open plan living. But as you said, I think, it is, if we are able to continue to work from home, I think the choice for many will be to have that additional bedroom, to have that workspace, particularly if you can push further out and get more for your money, because obviously the further you go from the urban fringe, the more you can get for your money, or these regional areas. When we have a look at some of the areas that have seen the biggest increase in searches, of the top 20, most of them have been in regional areas in Australia rather than in capital cities.
So that's kind of bucking the trend then, I guess. If the capital cities are, experiencing downward price pressure, is it fair to say that the opposite is true for more regional spaces at the moment?
You're absolutely correct. So what we saw, it was particularly in New South Wales and Victoria trend, is that the regional areas over the June quarter were still growing in price. So totally bucked that trend. I think we will see momentum slow down because, we've all been impacted. We're seeing transactional rates decline in the housing market. And I think we will eventually see a slowdown in price growth in regional areas during this very strange time. But I think, those regional areas could be a winner out of this, as we see more of us work remotely. And I think, it's taken a health pandemic for us all to reassess our lives and how we're living. And I think we were already seeing a bit of that trend in Sydney and Melbourne, as we saw people priced out of those markets, move to kind of regional areas such as Geelong, such as Orange, in close proximity still to the CBD. But it could continue to be a trend, and more so a trend, as we work remotely.
You're sounding really, really optimistic, which is making me feel a lot better about all of this. What are you sort of forecasting for affordability? I don't know if you want to break it down into sectors, or is it more of an umbrella look at the whole of Australia? Just, I guess, in closing, how do you judge that?
So the crystal ball moment. What's going to happen?
Obviously, if you knew what was going to happen, then you'd probably have a lot of lotto tickets right now. But,
yes.
What are you sort of saying? What do you hope for, I guess?
So I think, the property market has been very resilient, and that's probably why, my tone is optimistic, because it has been resilient. But, that said, there are headwind risks that still remain. And I think it's really the unemployment rate that could be a big question mark over, how well property fares, particularly if it's a sustained rate of high unemployment. But I think, we kept talking about this kind of fiscal cliff that was going to happen in September, October. But what we've seen is the extension and tapering of JobKeeper, and we've also seen the extension of mortgage holidays for those under serious financial strain. So I think maybe that kind of economic cliff will be more of a slope, which I think will be better overall. But I think really it then becomes a question. So, that cliff has been pushed out to next year. But I think it really becomes a question of how well the economy is rebounding, or will recover once these stimulus measures are taken away. And that's really kind of an unanswered question at the moment. What we need to do and need to ensure is we create jobs, so as many people are re-employed as possible. But I think it becomes a question of, where are we at come kind of March next year?
Nicola, it's been so great to talk to you today. I can't wait. I'm probably going to send you an email the next day or so to ask a lot more questions. So anyone who is listening to this podcast, if you've got any questions, I hope you don't mind me opening out the forum, but if you've got any questions that you want to pass on to Dr. Nicola Powell, please get in touch with me and I'll be sure to pass them on, because, property is a huge part of the Australian economy, of the Australian lifestyle. And I think it's really important to keep talking about it. And I'm really liking the positivity coming out of you. So thank you so much for coming on the show today.
It's been an absolute pleasure. Thanks for having me.
Thanks so much for listening. If you enjoyed this show, please leave a review on whatever platform you are using to listen, and be sure to subscribe if you haven't already. And if you do have any questions for the Smart Property Investment team, please don't hesitate to reach out either via our social media channels or at editor@smartpropertyinvestment.com.au/subscribe. Until next time, stay safe and stay well. Bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop, and for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.